revenues in real estate. To moderate this session, may I please invite Mr. VIKAS GULECHHA, a chartered accountant and an MBA by profession. He is an investment banker and partner at Rank Group, facilitating debt syndication, corporate finance, and project finance in real estate, warehousing, infra, education, hospitals, hospitality, renewable energy, and manufacturing. Have facilitated corporate finance for large and mid corporates, and his firm has been instrumental in raising over 18,000 crore in debt. A true believer in teamwork and being a team player and seamlessly working with multiple teams in different cities, he has been instrumental in executing complex construction and advising clients on their funding requirements. Please welcome him with an applause, ladies and gentlemen. Our first speaker for this panel is Mr. ANIKET BHARADIA. ANIKET BHARADIA is co-founder of PROPCATALYST and Samyak Estate. He is also the president of Walford Group, which is into various businesses like stockbroking and construction. He is the founding member of Cyper PropTech Fund, which is backed by CREDAI. He is MBA from JAIN School of Global Management. Recently, ANIKET also received an award from Union Minister Shri Nitin Gadkari for his contribution to the society. ANIKET is an avid scuba diver and has logged 100+ dives already. Please welcome him with an applause, ladies and gentlemen. खाना अभी खाया है आप सबने. थोड़ी सी एनर्जी आ सकती है. Come on, जोरदार तालियां. Our next speaker is AVINASH Rao, principal founder, ALT. He is an accomplished professional with over 2 decades of experience in a wide array of functions in real estate and telecom. He has over the years earned himself a reputation as someone who is assertive, driven, incisive, and a motivational leader with strong domain knowledge of strategy, business development, sales and marketing, operations and development management. Having started his career in 2000, AVINASH has worked in diverse portfolios at leading organizations like Reliance Infocom, Tata Teleservices, Knight Frank, and Puravankara. During his tenure at Puravankara, AVINASH held multiple roles and responsibilities, with the last one being president and business head of Provident Housing and Puravankara Land. Can we have a round of applause for him, please? Last but definitely not the least, can I please invite Mr. VISHAL GOEL, who is the last speaker of this session, an alumnus of the Harvard Business School and Harvard University Graduate School of Design. VISHAL GOEL has global experience across India, US, and Singapore markets. He has been engaged in multiple entrepreneurial ventures in his 20+ years of professional career. His ventures promote innovation, job creation, and creativity across education, life sciences, and industrial sectors. He has co-founded CERESTRA Ventures into 2015. CERESTRA is a private equity platform focused on investment in niche sectors of education, life sciences, and industrial. He has conceptualized and executed investment strategies across vertical and led deployment of $200 million US. Let's have a grand applause for all of them, please. Come on. Over to you, Vikas. Thank you.
Thanks, Priyanka. Good afternoon, everyone. So I hope everyone had a good meal. So let's have some energy now. So we have seen real estate industry being prospering pre and post-COVID. But what Catalyst has added post-COVID has been the growth, what it has seen a phenomenal growth across all micro markets within India. And a lot of new launches are being planned. But then there is another segment which has added to this whole growth, which is part of real estate but never was considered a crucial part of real estate. So what exactly alternate investment is all about? So let us understand that and let us moderate how this alternate investment can be a new avenue for your investment capital gains and also yielding good rental revenues. So, Vishal, so what all qualifies alternate investment in real estate? Is the opportunity of alternates suitable for family offices? So since the audience is want to understand what alternate is all about, so probably you can throw some light on that.
Yeah. So as the name suggests, whatever was not mainstream or whatever was a small scale was considered as alternatives. It was not like a well-defined, these are 5 sectors or these are the 5 sub-segments which are alternatives. But whatever was real estate, but where the scale and size was not material, usually used to get clubbed in alternatives. So we have educations in health, we have assets in healthcare, education, we have assets in life sciences, and some of these asset classes over the last 20 years in the Western market have become fairly big. Like student housing is very small in India, but in UK now it is no longer an alternative, it is a mainstream asset. And similarly, even in US, student housing is now coming into the mainstream. Again, if I talk about life sciences, which is basically the lab space or the pharmaceutical R&D space, when I started in that in the US, it used to be like an alternative with about 20 million square feet. Today, there are about 100 million square feet of lab space in the US on rent. And almost all big players in the office segment, be it Heinz, be it Tishman, all of them are now diversifying into doing what we call as lab space and alternatives. So I think, again, pre-COVID, alternatives was a small asset class, social infrastructure was not very relevant, but thanks to COVID, we have understood that the local communities are very important, the self-sufficiency of local communities are very important. So neighborhood schools, neighborhood hospitals, neighborhood medical centers, the people would not, like I would not go to a hospital after COVID if I just have a orthopedic or a simple cosmetic treatment. Why should I go to a big infectious hospital? And plus, even from a healthcare perspective, super specialization will come in. A cancer hospital will be a cancer hospital. The multi-speciality hospitals may not be required. Similarly, on schools, earlier the thought process of schools was, oh, we'll have big school, a famous school. Today, parents are saying, okay, we need a good quality school with great infrastructure, but it should also be something which is accessible and not 1 hour in the bus. So I think the whole scenario of these social assets are changing. And I think as a last comment before I close this thing, the counterparty has changed significantly. I think why family offices were not investing in these assets is because the counterparty or your tenant used to be either a very local doctor or a local educationist, used to be a very small balance sheet type of a person. But over the last 4 or 5 years, very large players have got into this business. So the counterparty and the scale and size of this opportunity has grown tremendously in this country. I think that's what my would say would be.
So now we know what all qualifies for alternate investments. So even a space near your home which is providing some facilities can be an alternate investment, right? Perfect, Vishal. So Avinash, with so many alternate investment opportunities available, why someone should pick rather than a traditional real estate and go for an alternate investment? And what are the potential risks and rewards associated with such an investment? So,
okay. Firstly, thank you. Thank you to the organizers. Thank you for having me on this panel. I'm quite grateful and happy to be here. Very valid question as to, why should somebody pick alternate investments? India is a country of small owners and small investors. That is the greatness of this country. Every year about on an average in the last 10 years, 2.5 lakh homes are bought in 7 cities of our country. Approximately in Bangalore alone, 12 million square foot of commercial real estate gets transacted, leased and rented. But where is the avenue for the retail shop owner to be able to monetize his or her asset? Where is the avenue for a small clinic to monetize their asset? Where is the avenue for, say, a 1 lakh square foot of retail come residential space to be monetized? this avenue is provided through alternate investments. What happens is that a number of investors today are either not investing in residential because they think it's cumbersome. There's a lot of paperwork. There is a lot of, lot of unknowns. And the second important part is, do I need to own a home to be able to benefit from the rental returns? Do I need to own the entire mall to benefit from the rental returns? Do I need to own an entire hospital from getting these returns? So people don't have right advice, people don't have the right avenues to invest. So if that platform is provided, and if that platform is given through alternative investments, there is great demand for people to invest in this asset class and real estate in general. The second question being, the rewards and risks. I'll come to the rewards. It's very tempting to say that it's extremely lucrative. I don't think so. It's going to be extremely lucrative. It is long-term. People should stay invested, and the expectation should be 1.5–2% bips more than what inflation might provide you at best. Because if anything is going to give you 15, 16, 17% return in today's day and age, then either it's too good to be true, or somebody is trying to tell you a tale that they cannot follow on through. So our sense as a platform is that we think 11% IRR over a longish period of 5 to 7.5 years is reasonable, as a reasonable expectation. The key is how do you provide liquidity, and if and when you can provide liquidity to the small investors, that is very important. The risks are, I think there are market risks which are there. People should be willing to take market risks. The good part of alternate investments is that most of these investments are made on ready assets. So performance risks come down, and hence market risks with respect to what kind of rental yields are being generated are there, but they are limited to the fact that the asset is still there. You're investing in a real asset, and you're not investing in something that's make-believe. So that's how I see it. It's a huge opportunity for retail investors, people who are interested in real assets.
Great, Avinash. So one of the alternate investment source which I am been tracking very closely, so it's the warehousing segment. So what has transpired post-COVID, right? So there has been a lot of traction in this space, and take Bangalore per se, you have a requirement of almost 6 million square feet of grade A warehousing, but the land availability is a challenge. So there are a lot many other things to it. So Aniket, want to know why warehousing has been such a hot sector and what has changed? It has always been there.
So the Indian warehousing is yet at a very nascent stage. It's yet growing, and it's quite a few years from now where it will possibly tap its full potential. Warehousing can be directly correlated to the per capita income of the country, and since the last few years we've seen actually some good improvement in that, and people have started spending a lot more than what used to happen. And suddenly the entire game has become about on-time delivery, or majorly even COVID taught people how to order online. The people who were not ordering online also have started just ordering online after COVID. So a few of these things have made warehousing very, very interesting. And just to give some data points out also, India's per capita warehousing consumption as compared to USA, which is approximately 50 odd square feet, China, which is around 9 odd square feet, and UK, which is around 20 odd square feet, India yet only consumes 0.2 or half a square feet per person. That's the sort of warehousing we yet have in the country. So there is a great chance for this thing to change, and that's one of the reasons why it's a hot market and it is doing very, very well right now.
So the gap what we see here, 0.2, and where the counterparts are performing, so there is a very great leg room for this sector to boom fairly. So Vishal, can you discuss your experience with investing in education, life sciences, bioparks, and social infrastructure projects? And to club with that, how you assess the potential commercial and research impact of life and biotech parks projects, and how do you measure the success of these investments?
Yeah, so I'll divide my whole thing into three parts. The one is education. We have invested almost now 2,000 crores in education assets across student housing, K-12, and across the country. So I think we were one of the initial investors in this sector. It took us some time, we did some mistakes, but today as we plan our INVIT in the next few months, it has been a very rewarding journey, I think, both for our investors, for us as a investment manager, and also as some of the school chains who have been able to declutter their balance sheet and get a long-term capital pool from our side. And we see this opportunity given the foreign universities coming up and the whole paradigm shift of K-12 schools. This opportunity would be billions of dollars going forward. We are not looking at investing too much in the existing schools because of complicated structures, but just the greenfield opportunity, I would say, is anywhere between $200 to $400 million every year. Coming to, I will come to the life science last because that is going to take the most time. We have also been very successful in investing in industrial assets. We don't do warehouse, we invest in industrial where the actual people come and do production. We partnered with a Sri Lankan group called Brandix, and we have created 20,000 jobs in Vizag. These are women who come to produce lingerie for Victoria's Secret. And today, because of the success, I think 1/3 women in New York wear a product manufactured in a small city of India called Vizag. And this is growing and can grow. And this is just one example. Can go into the toy sector, can go into electronics. There's a lot of work happening on medical devices now. We are doing a lot of work in Vizag now on medical devices. So I think this industrial sector where there is a real factory license, it is sticky, the company has invested money, it attracts us a lot because tenant is there for a long, long time. And for him, the way I see is that you cannot disconnect the school asset from the school. The soul of the school is in the asset. Similarly, the factory is also the soul of it. It's not easy to say, okay, tomorrow I'll close it and go somewhere else. So I think that is where it is. Now coming to life sciences, it is a very specialized asset class. It is very big in US, and COVID we have done very well. China is down. We are up in terms of the global dependency on for R&D and for talent. So what used to be a 2-3 lakh square feet market every year has suddenly become a 1 million square feet market. All our top 20 contract research organizations and about top 50 CRAMS organizations are doing very, very well. So today, India has about 100 companies who are using these buildings and who have a turnover of more than 500 crores. And the largest being 10,000 crores. So there are companies, I will love to quote them, like Deccan Chemicals, used to do a turnover of 800 crores pre-COVID. Now their turnover is 8,000 crores. It is not 10, 15, 20% jump. And, and all of them need more research, they need more production capabilities. And I think from us as a real estate provider, we can not only provide warehouses to the pharma industry, they use a lot of temperature-controlled warehouses, we can provide them R&D spaces, and we can now provide them manufacturing spaces also. I think from that perspective, this sector is bound to grow. It will grow in 6-7 cities where there is talent, but it is bound to grow leaps and bounds. Our current run rate of 2022 was about 500,000. This year we are expecting 1 million. So that shows the demand which is coming up in this sector.
So that's very insightful that social infrastructure is also gaining in India and a lot of jobs being provided. So Avinash, what you do in terms of digitizing the whole real estate piece, right? So there has been a lot of disruptions happening in this space. So how do you assess there has been real disruption in technology, and blockchain is changing the industry dynamics pretty well. So how do you how tokenization and blockchain technology will shape up the real estate industry going forward? And to club that, how does tokenization change the traditional process of buying and selling real estate assets and how it benefits the property owners.
Okay, so tokenization is a bad word, very, very bad word. But the fact is that, let me put a disclaimer out over here that this is nothing to do with crypto. So it's far, far away from, as far away from crypto as it can be. But basically what tokenization allows people to do is, in the parlance that we are talking about, is that you would be able to transact 1 square foot. Now, if you're able to transact 1 square foot, imagine what it does to the industry. In our, we firmly believe that it's an inflection point. Why is it an inflection point? Let's take, I'll just take a couple of minutes so that I can explain this slightly better. Real estate is not commercial real estate. I mean, it is a big part of real estate, but Indian real estate is all about the residential real estate and how the residential asset class can be transformed. Today, the biggest problem faced with all developers in our country will be, how do I sell an apartment? Because when I develop 10 acres, I'm trying to sell the first apartment as well as I'm trying to sell the 1,000th apartment in the same manner that I sold the first apartment. So many questions come about Vastu compliance, blah, 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 location, etc., etc. So finding this one consumer is going to become difficult at some point in time. Like Vishal said, that student housing, senior living, or massive asset classes in the world over, you see them being institutionally financed. In India, they've still not taken shape. Similarly, co-living is a big opportunity, but the biggest opportunity in our country is rental housing. Now imagine if we move away from the traditional sell one apartment to one individual to rental housing in a big way, there will be so many more people who can own the real estate asset class, but need not worry about paperwork, need not worry about who is going to rent it, how is it going to be maintained, how is it going to be replenished, etc. It all can be done through tokenization. By virtue of ensuring that you don't need to sell one apartment to one individual and one apartment can be sold to 100 individuals as a portfolio, you would be able to sell it to an investor class which does not exist in real estate today. That is the big opportunity that exists. There are multiple questions around it. How will it function? Is it legal? Is it not legal? How will you monitor it? So in our journey as a platform, we believe we've come a long way in the last 1 year, where we've done a lot of work with both legal consultants, tax consultants, and whatever understanding that we have of residential real estate. We believe that this is possible. We believe that a developer can today offer a portfolio of apartments to the larger investor community, and they can buy 1 square foot of that portfolio. If that happens, and if that can be done, then suddenly we have this, from 270,000 people investing every year in real estate, it will be 2.7 crore investing in real estate. That is the kind of potential tokenization and digitization has for the real estate industry. When I said that, I mean, please don't mistake me when I say commercial real estate is not as important. It is extremely important. But the demand for residential real estate in our country is unprecedented. Nowhere in the world these many homes get bought every year. And this, I'm just talking about the primary market. This is not even taking into account the secondary market. So huge opportunity in tokenization, massive opportunity both from the seller community, which is both developers as well as asset owners, and huge opportunity for investors. There are 25-year-olds, 26-year-olds today who are coming out who, without batting an eyelid, go and put money in crypto, go and put money in new asset classes without thinking twice. But they cannot put money in real estate because they don't know, they don't understand. They think, I have to go to the registrar's office to do even the smallest thing. Now, if they are allowed to invest in a real asset, touch and feel real asset, they will happily do so. So you will just expand the scope of the market. And finally, this is a way, it's been often used, and hence it feels it's been abused, is that we will democratize ownership. It is true democratization of ownership when more and more people come and participate in real estate, which arguably is the biggest opportunity in the country, not just in terms of, what it does to our economy, in terms of manpower, in terms of jobs, in terms of the ecosystem it creates, but there is nothing more rewarding than a piece of land that somebody bought 10 years back. So that reality cannot be, diminished in any way. So by digitizing it, by tokenizing it, the opportunity expands not by 10%, not by 100%. I mean, we really don't know how large this opportunity is, because there is great love for real estate. I'm just taking an example about school. Imagine if somebody says tomorrow that I can own 1 square foot of the school that my son or daughter attends, and it is 6 kilometers away from my home, and in the process, I'm also earning a return. Now, that is the kind of opportunity both alternative investments as well as digitizing real estate offers in our country.
Wow. So imagine that 1 square feet of real estate can also be traded. So it is more of what kind of liquidity it can mop up, what kind of market players and investors can come to this kind of scenario, right? So Aniket, again on the e-commerce and online channels which have boomed, they were booming pre-COVID, and post-COVID it has given an impetus push also. So what kind of investment opportunities do you see for investor in warehousing space specifically, and further what are the government initiatives and how it is helping the warehousing sector overall?
So e-commerce has been a major driver in the warehousing sector, and when I talk about warehousing, it doesn't only mean where you store goods, but as Vishal rightly said, it also is these industrial sheds that also comes inside warehousing only now. So of course, your e-commerce has been continuously growing a lot in our country. We are the second largest operators of smartphone. We have one of the deepest penetrations as compared to anywhere in the world for smartphones. People order, I think we are the largest ordering population as such who orders online. And compared to a developed market, somewhere like a UK, there are 33% of the sales actually happen through online. But in India, it's yet less than 5%. So that's the sort of scope that you will need warehousing. And after a particular size of any startup which becomes like an Amazon, or after a particular size, every company likes to manage their entire supply chain, because that's the entire business gets managed from. It is very important, like how from 1-day delivery, some things have started coming also to a 10-minute delivery. So that's one of the reasons why it's becoming very important to manage their supply chain also. Coming to the government part, the present government has been taking a lot of initiatives on the infrastructure and infrastructure, as in they have been developing more than 40 odd kilometers of highway, national highway, almost every day, which is an unbelievable feat to achieve. So this has been helping for goods movement from here. It's been helping for goods movement, as well as coming out with more innovative ways to transport goods through the multimodal way, through the coastal shipping, through the other logistic ways. So it's become very easy for movement of goods, as well as with GST coming in, it doesn't matter where do you keep goods after this. The taxation is the same throughout the country. As an investment class, it definitely offers a lot of stable income, because as once there are crores of crores of values of goods which are kept inside a warehouse, it's very, very important for a warehouse operator, or rather even someone who's leasing, to have possibly always get the best of the warehouse. And once, in my experience, what I have always seen in the last 5-7 years, once a tenant shifts, it is very difficult for them to change their warehouse, because the entire process is set up around that. So it's very, very, it's a very stable income class, and country, as an investment class, anyways, our country is very, very fond of real estate, especially being land, especially investing on the land side. So this, you are investing on a land which is also making some sort of a revenue for you. This is the best sort of a investment class one can possibly dream of.
So one very good point what Aniket has highlighted, that the logistic cost, and the government is working very aptly to get that cost lower, and they have targeted around 8%. within next 5 years. So we are at now 15%. So that's so how warehousing will play a crucial role in achieving that piece of target. We can imagine how and what kind of investments are going to come in this space, right? So Aniket, I would also like to tag one question on this, that what we have been seeing is there is a lot of getting large land parcels for such kind of infrastructure is getting very difficult in all these micro markets. So how you feel this challenge to be addressed going forward?
So honestly, that's what makes it into a business for people like us, because almost everyone in this room is into real estate and we know how to acquire land. That's one of the reasons why it is a business for us. Today, people with like most of the MNC funds like Morgan Stanley, Prologis, XYZ people, they have a lot of capital, but it's very difficult to acquire land in our country. And as the panel discussion before us was also mentioning, it's generally to deal with people in terms of buying land, it's very, very, very difficult. And if we take an aggregated land for warehouse, then the cost of it will not really suffice. Will not, a warehouse is always going to give you a rental between 18 to 20 to 24 rupees. And in case if you buy a land which is very expensive, it's not going to make sense. The entire business is not going to make sense. So that's what this creates into an opportunity. Of course, buying land is very difficult in our country, and everyone has gone through this, and possibly that's what makes it into a business very well.
Great, Gani. So Vishal, one bit that what we have been seeing, the average rental yields for commercial projects varying between 7 to 8%. How, if I look at an alternate investment, right, what kind of yields and returns I can expect, and will
smaller. Again, you know, as more number of players come in, there would be competition, which will bring the yield down. I think today we are about 200 basis points above commercial office space, be it education, be it healthcare, be it life sciences, and especially when we are taking construction risk, you can add another 200 basis point. So we are doing YOC, yield to cost, of anywhere between 13% for build-to-suit projects, and we are doing and looking to acquire or stabilize the assets at about 10%. So I think that is the gap we are playing, and this is basically the market is growing and there are fewer players. And I think one of the things which I find very interesting for people in this room is this is the asset class for family offices, because the size and scale is not that you have to put all your eggs in one basket. Most of the families have some land parcels. It is maybe the good use of putting these land parcels into use by making them into social assets.
So coming to the last part of our discussion, so just quickly would like to understand from all three of you, will these alternative investments grow beyond the COVID era, and what future trends we are looking in alternate investments?
So the way India has been going ahead, on the track of being a $5 trillion economy, one thing that all of us are very, as in the entire country has been very bullish, is that manufacturing will eventually shift out here. We have been already seeing these trends happening in a very massive way, and it does make sense for any manufacturer also to manufacture out here, because the internal consumption is very, very high in the country. And one thing, again, the government has been doing very rightly is going with, instead of joining country groups, they have been trying to do a lot of FTAs, the free trade agreements. So this way, if there is more manufacturing which will shift to India, and we will possibly need more 10 places like Hosur just to suffice even a 5% manufacturing shifts from China to India. So the future trends for warehousing that way looks very, very positive in this aspect.
Absolutely. I mean, there's no question as to how much will this grow and when will it grow. I think COVID might have just exacerbated the whole process, but investments in alternate assets had already started pre-COVID in our country. A lot of emphasis was already there on warehousing for sure, and there was a lot of emphasis on various other asset classes. But how this whole process will take shape, in which form, is something that remains to be seen, but it's a huge opportunity both, like Vishal mentioned, from family offices standpoint, but most importantly, it's a great retail opportunity. The retail Indian consumer is the consumer that everybody should look at, and look at him or her very seriously. They're not gullible, they're not going to just invest in something which is a fad. They are going to invest in opportunities which then give them the right kind of returns. Hence, if that investment opportunity is tapped into, it's a huge opportunity that is just waiting to get unleashed.
So my theory is people in India will get richer, and if they get richer, they will consume more. And they will, given the population we have, it will get older, will need more healthcare. You'll be surprised that we have today 10,000 beds for people above 70 who cannot be taken care by their families. So it was a very social, thing that you cannot put your old parents into an elder care home. But now, given the lifestyle, given the ability of the person to live when he has lost his memory, senses for maybe more than 10, 15 years, he needs specialized care, which cannot be delivered at home. And similarly, there is a very huge consumption of services by children. I think people are having lesser children, but the intensity of expense on children is very, very high. And with this new foreign education bill, number of students going abroad and number of students coming to India will change significantly. And again, you will have those, there was an Amir Khan movie, I still say that, where we used to have these hill cities where there were schools. You will now have dedicated cities where you will have 10, 15 colleges, which will be dedicated for students and the young, and there will be that type of ecosystem. And as rightly put, manufacturing is the biggest opportunity. The huge change happening in manufacturing, and the number of manufacturing guys who are utilizing the EVs and the FMCGs and all of them, the consumption of manufacturing space is going to be crazy. It will for sure surpass the commercial space in the next 4 or 5 years. So I think we are going to see a very different real estate world. There was a time when there was only residential real estate, there was no commercial. Then came the era of commercial, where people thought residential is not sexy enough, we should focus only on commercial. I think the next 10 years or a decade we'll see a 10x growth of the alternatives. That's my view on that.
So now we have a broad perspective of what alternate investments are all about and what kind of opportunities it provides from the investment point of view. So definitely we know where to bet our money to realize the next level of growth for our portfolios. So thanks everyone for giving such insights, and surely there will be a lot more discussions going ahead. Thank you.
Thank you, panelists, for such a wonderful session. I'm sure all of us are bullish on the trend that's going ahead in 2023, and manufacturing being the largest consuming sector. All right, before we move ahead, can I please request Ashok Ji Bhandari, Amit Ji Kothari, Dev Samar, and Sunil Ji Saklecha to please step up on the dais to felicitate our panelists. Sanjay Ji Lunkar, can we have you also on stage? This fantastic panel discussion is going to be felicitated by Sanjay Ji Lunkar, who's also our co-sponsorer. Can we have a round of applause as we felicitate all of our panelists? Before we move ahead, I would like to inform all of you that we are live on YouTube on JITO Bangalore channel. So make sure you tell your family and your friends to tune in and listen to these interesting conversations we have here today. Moving to our next panel discussion, which is on fractional real estate. We have Sunil Jain, who is going to be moderating this session. Sunil Jain is an investment banker with more than 20 years of experience in investment banking and is currently the managing partner of Sprout Capital Advisors, LLP. Jain has been a recipient of the inaugural 40 Under 40 Alternative Investment Professional recognition bestowed by AIWMI. He has also worked extensively across consumer enablers, infra enablers, and real estate sectors, and has crafted, led, and closed transactions over worth $2 billion US. He is a chartered accountant and holds an MBA in investment banking from SP Jain Center of Management. Can we have a round of applause for him, please? Audience, I know you'll need a fuel up, but before that, we'll need a louder round of applause. Come on. Our first speaker for today in this session is going to be AHUJHA, who is reckoned as reputed thought and action-oriented leader with proven success in real estate and financial services domain. He is acknowledged as a key contributor in institutionalizing the residential and commercial brokerage industry in India. His leadership competence dives across real estate and financial services, having worked with leading fund management, real estate, foreign exchange, wealth management, banks, brokerage, telesales, mutual funds, and life insurance organization. Ankush has been a key member of the core startup team responsible for success of launch of top-notch organizations like American Express, Mirai Assets Mutual Funds, DLF Pramerica Life Insurance, Agrante Realty, and EXL Services and Primal Fund Management. Please give a round of applause for Mr. Ankush Ahuja. And our second speaker for today in this panel discussion is Mr. SUDARSHAN LODHA, who is the co-founder and CEO of STRATA, a tech-enabled commercial real estate investment platform. His vision is to offer premium commercial real estate, enabling investment accessible to everyone and driving the adoption of technology in the real estate industry. STRATA is the first company in the space to cross 1,000 crore in AUM, and they achieved the same in less than 2.5 years since the beginning of operation. Give them a round of applause, ladies and gentlemen. And before we start this session, can I please request all of you to turn your phone on silent or switched off mode for a seamless execution of the panel discussion. Over to you, Sunil ji.
Thank you. Thank you, Priyanka. First and foremost, I think a big round of applause for both our panelists today, Ankush and Sudarshan. Sudarshan, of course, has been at the leap ahead in this industry in terms of being the first company to hit about 1,000 crore AUM in the fractional real estate space. But, maybe we'll start this session. I think we already delayed by a few minutes. To start with my first question, Ankush, given a lot of people in the audience have heard about FRE or fractional real estate as we call, but maybe, it'll be helpful if you could throw some light in terms of what actually is fractional real estate.
Yeah, thank you so much. First of all, thank you so much to the JITO platform for inviting us for this important initiative. Rightly asked, fractional ownership, as my perspective and to a lot of people today, seems to be a very complex kind of a term, fractional ownership. Well, with the kind of background I carry in terms of various organizations, it's not a new concept. Well, touch basing on the fact that real estate has seen fractional ownership for the last 20 years in various formats, and going back to history when we said that there is a property which we want to buy, and within the family they said, it's expensive, it's very expensive, mere pa paise nahi hai, we don't have the money, milke le lete hain, that's a statement we've all seen in our lives. Moving on to the modernization, last 20 years we've seen assured return, lease guarantee under construction properties. We've seen the timeshares of the world. So it's all there. I mean, fractional ownership is in various formats, various returns, I would say. But recently, post-COVID, this concept has actually picked up for a lot of reasons, I would say security is the synonym today in the real estate space. Every customer is looking at stable returns, is also looking at security for their perspective. So fractional ownership in the commercial real estate, I think is very importantly a factor which is in the minds of the customer today. They want to invest into a property which has got nil to, or rather close to nil execution risk at the moment. That's very important. Secondly, they're looking at stable returns. They want a longest return. They want the monthly returns to come in. So fractional ownership over a period of time, where it's now a 2,500 crores industry and way to go. Sudarshan is here, definitely is leading the baton for that, and a lot of other new players are coming in. The idea is to get the customer stable returns. And I personally feel this will grow from here because the returns are phenomenal versus other asset classes. And definitely it's promising in the near future as well.
So, Ankush, you mentioned two things, right? Returns are phenomenal. Traditionally, जो हम देखते हैं residential real estate में करीबन, we buy properties and that yields it's only about 2 to 3%, maybe 4% a year. तो एक तो वो चीज़ जो fractional real estate में, there are bunch of companies who are saying attractive returns. तो क्या return मिल सकता है from an investor perspective, given that audience here is largely could be potential customers who are looking to invest in this industry. एक तो वो question है. दूसरा, maybe Sudarshan, there are lots of platforms जहाँ पे आज जो fractional real estate देते हैं, STRATA है, PROPCATALYST है, PropAMC है, MIHAR है, there are so many platforms. तो एक investor को क्या देखना चाहिए when they are looking to, invest in one of these platforms? So, those two questions, maybe.
Take the first part of it, I'm sure second definitely.
Sure.
So returns, every asset class give different kind of return, but I will again say that what's the prospectivity to grow the money from here? It all depends on the fact at what entry price you're entering the transaction, very importantly. Entry yield is not the only barometer for any asset class to say, okay, it's a great investment. One, it has to be a longish asset, a long-term asset, good tenant. Definitely the fact that you bought it at the right price, and there is a prospectivity of the asset to exit. So these are the important factors. Last but not the least, every investor should look at the entire ecosystem. Well, just to touch base on the ecosystem for a few seconds. The ecosystem is all about, there's a entire platform from a trusteeship to a escrow partner to a research report to a lot of other factors which really support the cause. And last but not the least, one should actually look at the platform's strength and ability and the past track record. That every platform is good, from my perspective, every platform is good. But looking at a platform which is a background to it, definitely, and the approach is right for the asset manager. What I'm trying to relate to this fact is the asset manager. If the asset manager has a longish view and has a track record, definitely should be the points to take care of before choosing any asset.
I'll just add a couple of points. First, thank you, Sunil, for having me. Sorry for my sore throat, but I hope I'm audible for everybody. So every year it's a 3 to 4 lakh crore, 3 से 4 लाख करोड़ का लोग residential real estate खरीदते हैं इंडिया में, जिसका 50% investment ही है. तो अगर आप सोच रहे हो कि 1.5 लाख से 2 लाख करोड़ का residential real estate अगर 2% के लिए पैसा लगा रहे हो, तो क्यों लगा रहे हो? I'm sure many of you in the audience also have more than one apartment or more than one house which you stay. as such from an investment कि हाँ rent कमा लेंगे, because that's the most easiest thing for you to do, and also within your reach of कि मेरे पास 1-2 करोड़ है तो मैं और क्या खरीद सकता हूँ, right? Even in Kormangla today, with 1-2 crores, you can never buy anything in any of the 80 feet or 100 feet road if you want to get a commercial property as well, right? So this is what we felt. This is the need of the hour to move the residential money. I'm sure a lot of you guys are selling residential as investments as well, so I'm not to demean you from your business, but the whole idea is we want to make people more aware of their real estate wealth. Real estate wealth management is the most under-penetrated segment in the world. Everybody presumes they know real estate, because historically real estate has never crashed to whatever, right? People have never lost their principal, at least for that matter, right? So people's perception is that. हम उसी को change करके we are saying यार बहुत कुछ change हो गया, dynamics have changed a lot. There are large developers who are sponsors of these events as well, who have now really know the game, have access to large capital, which means your dream to own commercial real estate will always be a dream, because let's take Prestige as an example. Today they don't do any transaction less than 1,000 crores or 500 crores. When they started, they used to do 20, 30, 50 crore kind of buildings as well, but now it's just not their time. How do you and I as normal investors even aspire to put something with Prestige if we want to as well, right? Because the ticket size is just humongously grown for them, and their access to capital is also humongously grown. So that is what we are solving for by giving investors opportunity to invest. So we are not saying we are better than any other asset class. We are just saying that we are better than residential asset class, nothing else about it. So in terms of platform, to Sunil's question, see, there are multiple things you need to look into consideration. First, real estate, when I told you residential, 2-3 लाख करोड़ का मार्केट, तो आप समझते हो कि एक डेवलपर तो नहीं बना रहा है, कम से कम 2000 डेवलपर है जो बना रहे हैं इतना सारा स्टॉक अक्रॉस इंडिया, और एक प्लेटफॉर्म के पास कैपेबिलिटी नहीं है कि वो 2-3 लाख करोड़ का ट्रांजैक्शन कर रही है. यू डोंट सी ओनली अ housing.com selling, you don't see only a no broker selling. There are 1 lakh brokers across. There's so much more as a business to do. So when you look at somebody who's through the जो प्लेटफॉर्म के थ्रू आप खरीदना सोच रहे हो, वन वेरी इंपॉर्टेंट पैरामीटर इज ये है कौन, इनका बैकग्राउंड क्या है, what have they done, if there's a track record, if there's a new company also for that matter, then go back to the asset manager's capability कि यार ये कौन है, इसने क्या किया बैक में, because you're not only relying on the capability of the asset to perform for you, but it's also the asset manager whose job is to get you the best returns. जैसे एक प्रॉपर्टी हमने पैसा लगाया था, investors were making about 9% returns, and we have a 12-year lock-in in that particular property in Bangalore only. Now, as an asset manager, my job is over, right? हमने negotiate कर लिया, अच्छा price ला दिया property का, and now investors can get 9 and plus 5% across for the next 15 years because there's a good lock-in irrespectively. But then, as asset managers, the job is now how do we monetize more? तो अभी हमने solar लगाया property के ऊपर, and my investors' return has bumped up by another 100 basis point by hardly any investment in return for that matter, right? So the idea is more now also to, not as a platform to just go and find a property, but as a platform to go and find, can I monetize more for my investors, number one. Second, we had invested in a property in Jaipur. Our tenant had issues. He was saying that, hey, I had envisaged कि मैं factory लगाने वाला था for this particular reason, but मेरे को contract नहीं मिला, so I don't want to put the factory. But I know I have signed up lock-in lease with you guys. Can I do something else? Can you guys help me out? Can I exit the property and I can't keep paying you rent? In just about 2 months, we brought in Havels as our tenant, and got in the similar terms, in fact better terms for our investors. So हमारे investors का return जहाँ 8.5% था, वो jump up के अभी 10.5% हो गया है as an investment return as well, right? So you need to look at the guys who are running the show for you, because one is the property will run because आपके या मेरे हाथ में नहीं है कि मार्केट कैसा ग्रो होने वाला है in a particular market. Nobody knew how Manyata Tech Park would be Manyata Tech Park 20 years back, right? So the market becomes in itself because of players coming in together, but it's asset managers. Like an embassy, you had the vision that no, we can create a world-class tech park as a developer or an asset manager. That's something which is very, very important for one to look at before investing.
Got it. Thanks for that, Sudarshan. I think एक तो आपने बोला कि we should look at the company who is offering this. Second is probably the asset manager and his vision. But यहाँ पे बहुत जन है जो are investing into real estate अपने नाम पे खरीदते हैं, and there is a trust circle built. कि हम लोग 5 दोस्त हैं, मिलके हमने एक प्रॉपर्टी खरीद ली है, राइट? वो 5 के बीच में ट्रस्ट है, तो वो ट्रस्ट कैसे एस्टेब्लिश करते हो जब वो आपके if they are trying to invest in platforms like a STRATA or a PROPCATALYST. So how do they build that trust with you, or what is the investment structure and comfort that you provide to these investors? I mean, maybe a rudimentary question from the industry perspective, but I'm sure a lot of these people in the audience would want to know, okay, how do you, give the trust out there when they're investing money with you?
Okay, prior to Strata, I was a lawyer. I was a real estate lawyer. So one thing I've realized, those 5 friends which he gave as an example are the ones जिसके cases में लड़ता था. क्योंकि कोई ना कोई एक दोस्त का झगड़ा होता था. One guy wants to sell, one doesn't want to sell. Forget friends, right? If family is the largest part of my real estate litigation, which I used to do, where 2 brothers having issues, whether it's respect to inheritance that I didn't get the maximum, he got XYZ, and assets. I'm sure multiple assets in Bangalore जो अटके हुए because of family feuds or XYZ reasons, right? So this was one of the crux of what we wanted to start, that people want to buy. Let's take this as property as an example. 100 crore की property है. I want to come by, I go to Sunil, I go to Ankush as my great friends and say, खरीदते हैं property, because when you're looking at buying large scale properties, you go to your inner circle of friends and trust them, right? You'll not go talk to everybody you meet at JITO event and say कि चलो पैसा लगाते हैं and do it, because you don't know them, because अब कभी-कभी लोग तो अपनी जमा पूंजी लगाते हैं, लाइफ की जमा पूंजी लगाते हैं in buying one particular property, right? So we realized that people trust only the inner circle, and not inner circle will have the money all the time. They might also have trust issues with you कि तू तो बड़ा आदमी है, तू क्यों मेरे को लाके पूछ रहा है property के लिए, तू ही खुद खरीद सकता है, you're such a big guy, right? So this was one of the core reasons why people are not buying properties, or when they bought, which eventually went into litigation as such. So the idea was, can we bring in a legal structure which solves for the entire piece? And hence we went in deeper and we found that AIF करके concept होता है, alternative investment funds, जो बड़े-बड़े funds चलाते हैं, उनका एक SEBI vehicle होता है जिसके through लोग पैसा लगाते हैं and they deploy money. उसका जब हमने homework किया तब हमने realize किया कि ये vehicle ऐसा है कि investor ने आज तक पैसा नहीं कमाया, सिर्फ fund manager ने पैसा कमाया है. I would not know to name large funds, but
I will prove that wrong here.
But multiple funds have not made money and have lost money for investors, right? So reason being, they were going after residential debt, क्योंकि 18-21% कमाना है तो आपको residential developer को ही देने, who can give you that money. Commercial में इतना पैसा कमा सकते हो, but then again, hardly few people are there in that segment who understand commercial business as well. Because commercial business is about leasing, about selling at the end, but residential is much easier in comparison. So the idea was, can we create an Indian Blackstone where rental income investors को मिले, because everybody loves rental income. हम residential real estate में लगाते हैं ताकि rental return कमाएं. But can we get them the commercial investment experience? And then we went into the whole SPV structure, और हमने समझा कि अगर एक private limited company खोल के खरीदते हैं, and where people don't know each other, but they are following the rules of the game, they're following what Companies Act follows, and if we can scale from that standpoint, I think we've solved for that, that you don't need to trust anybody anymore. You trust the Companies Act because it's evolved. It's 1956 the Act exists. It's evolved. There are enough and more precedents, minority shareholding se leke everything. Everything can get constituted from that standpoint. वो हमने structure किया. To what Ankush mentioned, we've been talking for the longest time. COVID was definitely one reason where I could explain people what we do. Otherwise, half of the world thought we are a Ponzi scheme, कि हम पैसा लेके भागने वाले हैं, etc., right? Whether or not this was reality, what we faced 1 year before COVID happened. And then COVID was the reason where people could patiently sit and listen to us, because they anyway had nothing to do. And they could hear us out and say, this is what we're doing. Obviously, I'll go back to our first 100, 200 crores of investors who gave us the money for the trust they had in us. They are trust me, they are the evangelists who have created an idea to an industry today of sorts. To what Ankush said, it's 2,500 crores. It's super under-penetrated. This can be a 20,000 crore market every year to the kind of real estate opportunity India exists, right? We are 50% developed, 50% needs to be developed. As much as you see, we are the office of the world. We are going to be the factory of the world. We'll be the healthcare of the world. Multiple things will happen, and we'll continue requiring large-scale real estate investments. And unless all the world does not come in and deploy money, and not only these 3-4 funds who deploy money, they're never going to scale, because वो 3-4 fund को भी यही question उनके LPs पूछते हैं कि तेरे को कौन खरीदेगा जब तेरे को exit करना है. So unless domestic participation doesn't come, we'll not be able to scale. That's what we're trying to do.
I think well answered. A couple of points to add, actually. Rather two parts to the answer from my end. I think I was a part, in my erstwhile organizations, I was a part of Pyramid Capital, where I raised about 3,000 crores in a blind pool and a category called AIF, which you rightly mentioned. At the latter half, I think there was another device which came on the shelf, which was PMS, a radical shift came in where investors said, we trust you, we've been investing money, and a lot of funds have not performed. Don't want to name them, but fact of the matter is that the psyche of the customer today says that I want to know what's the asset. I really want to see the specs of the asset, details of the asset. I want to do my own due diligence, with my relatives going on the site or actually going to Google, which is the best friend for them, and saying, okay, I have done the due diligence through a magic bricks or 99 acre. So fact of the matter is that the asset today, what here we're talking about, is the trust, which is automatically developed because we showcase the complete asset. And the second part of the thought is that to build the trust, well, in sales or marketing, the fact is that the certified people have to do the certified job. So we have the entire, in the fractional ownership space, we got the entire ecosystem from a law firm to a escrow partner to a research report coming from the IPCs or a taxation partner or a legal partner. So I mean to say that entire ecosystem is that every expert is giving their own certification to their property. And we as asset managers are doing a lot of things, well, he said a lot of things which are add-ons what we're doing to the property to ensure the rentals come on time and we earn that bit of management fees, or the performance fees at the later end. So all these factors put together, the customer post-COVID really wants to know that I need to, if it's 25 lakh rupees or a 25 crore, I need to know the asset. I've got all the right to understand, see the asset. And real estate is all about taking the entire paperwork in place and being satisfied about it. So that's, I think, the trust factors which are building into the growth of the particular sector.
So, so thank you, both of you. I think just to summarize in terms of, how they're building in trust is, one, there is transparency from the word go in terms of the asset you're purchasing or the asset you're investing, and in terms of the structures, including the legal counsels, the title deeds, the trustees, the flow of capital, the flow of money, the flow of rental. So all this is very transparent, and this is a journey industry evolved हुई है over the last 3-4 years. आज obviously guys like STRATA have been at the forefront, but PROPCATALYST is soon catching up, and they have come to a stage where they've built in this transparency. I think they also answered the question कि आज करीबन 2500 crore का investment हो रहा है इन platforms में सब मिलके, but ये industry सालाना 20,000 crore तो absorb कर ही सकती है, which is about 10% of the 2 lakh से 3 lakh crore real estate का market जो इंडिया में है. तो दो question है which I will ask the panel, and then probably I'll open it up to the audience for 2 or 3 questions. एक question मेरे को ये पूछना था कि इंडिया में आप बोल रहे हो कि 20,000 crore की opportunity है, and this is where combined all the platforms are around about 2,500 crores today annually. But how big are certain companies like yours in the US or the developed economies? Are there very large companies of that nature in the US? If yes, can you show that or explain about 1 or 2 of them so that the audience understand that this is a large market out there in the developed economies? That's my first question, and then I'll come back to the other one.
Yeah.
So in the US, I'll start with the US as an example. So what we do, US is I think about an 8-year-old industry in a more organized manner, unlike unorganized. So US currently is upwards of $30 billion market of assets traded through such platforms, the largest being about $6 billion by a platform called Cadre, CADRE.com, Reality Mogul. There are multiple players. Again, like I said, I think there are about 8-9 players all having $1 billion, जिसने 8-10 हज़ार करोड़ का धंधा किया. Point being, the asset class is so big that एक आदमी can never get a larger market share no matter what, right? Like for instance, even if I have to let's take residential real estate as an example. You may say Prestige does 12,000 crores of business in Bangalore, but Bangalore might be a 60,000 crore market. So he just has 20% market share in Bangalore alone, versus such a large market in itself, right? So point being that it's a very large space. In the UK, it's catching up. In Australia, it's catching up. Dubai recently, there are about 3-4 companies who are now scaling up. I think it's a very smaller nascent market because it's very limited to residential real estate, unfortunately. But that's the opportunity in general, what we foresee for ourselves. So if US can do it, so can we. Unfortunately, we always play the catch-up game के पहले वहाँ हुआ फिर यहाँ होता है. But I think we can definitely have a much larger business appetite to what US real estate can be as such.
I think just a point to add is covered the actually answer for that. But fact of the matter is, as I said, that last 20 years, fractional ownership is in existence now. Now the regime is all about safety, rental returns that can be actually beyond commercial real estate as well. There are a couple of players in the market who are actually ensuring that the asset, underlying asset is safe, it's a stable asset for the customer. So rightly said, one player cannot take care of the entire number, which is the potential for any country here, right? And I think way to go for us as well, and the other players in the market as well. But the domains will also, the asset classes will also change. You will see a lot of new asset classes and further fragmentation of people thinking about how do I get all the customers, the maximum amount of customers to invest. The ticket size will vary. A lot of things which will change over a period of time. So I feel it's a great opportunity moving forward as well.
Got it. One more question again to both of you. A lot of people here own assets, right? I mean, different kinds of assets. Some of them may be owning residential, some of them may be having land. How can they associate with platforms like yours? I mean, is there a manner in which they can associate with platforms like yours? And two, on a lighter vein, a lot of us have cash. So do you accept cash when investment comes to?
I think talking about the audience sitting in this room, definitely everybody's an audience. The latter part, the unlegit part of it, what he said, I think that's not the industry which imbibes that actually, because I feel it's people's asset and we asset managers, right? One. So it's absolutely the right for the other investor to know what's the right price of the asset. So that part of it cannot be absorbed for sure. Well, an advice, I think people who really want to invest in the fractional ownership space, one, it has to be long term. It cannot be a churning of an asset into 6 months to 1 year. Definitely, I say no to a lot of investors. While I've raised money in a similar platform, I'm very clear on that do not expect the money to double up or 20%, 15% in 1 year. It's a 3 to 4 years of asset, one. Returns will come on time because it's right away coming straight from the tenant. It's not an otherwise model where the respected developer is giving an assured return. Well, I personally feel that these are two things which are important, which for the customer's mindset, Rest is, I think, somebody who has earned real estate, money in real estate in the past are our audience for us. That's all I can say. So, because that's the only asset class which really makes money for any millionaire or a billionaire in the world. Real estate is the underlying asset. So I think that's the basic factors for any investors, what we're looking at.
Thanks. Sudarshan?
I'll just add one point. So I think he's covered on the investment part. कि अगर आपके पास 5 से 7 साल का mindset नहीं है, तो it's not worth deploying money with us. Obviously, there's no question of cash because today we have investors from all over the world who deploy money, Indians across the world. So imagine even if I have people from 5 cities today deploying, मैं उनको बोल नहीं सकता हूँ कि चलो 10 crore की प्रॉपर्टी थी, 1 crore कैश में था, तो 5 लाख रुपए तुम कैश भेजो, कहाँ से भेजेंगे? It's impossible for us to do that also, right? So practically, it's not as scalable if you get into that, and that's one of the core things which we're trying to do is to remove that completely from the ecosystem by being more transparent, letting them know other sale transactions which have happened before they deploy the money, so that they know really the price at which they're buying, के market में खरीद रहे हैं, premium में खरीद रहे हैं, discount में खरीद रहे हैं. Very important. But for investors generally, people in the audience, I know we are very, I'm a Marwadi Jain too, so I know how enterprising we are and how much we love making money in general. So there are ways in which, one, we can associate in general as investors and, as platform, and you guys on the other hand, that if you have lands or you have an asset which is empty, you want to sell it, we can always work together to help you lease that particular asset and then buy it out from you. That's one approach, so you can monetize your asset as well, number one. Second, obviously you have a lot of residential, start selling that and start deploying money here, you make better returns, of course. But otherwise, if you have lands where you wish to build something but are lacking capital, we can come in, we come with our banking capabilities as well, where we can come in and create that institutional reputation you would want for your particular property, can be done as, partners. See, end of the day, we wear the same blood as you. We are here to make money, you're here to make money. We are also HNIs, you're also HNIs. We're not a fund कि हमको आपका पूरा खरीदना है. We want to do it while we're always open. If you want to exit, we're always there to buy it. So even give, like we're doing one with one of our investors, वैसे कि आपको जब बेचना है तब हमको ऑप्शन दे दो, हमको जब बेचना है हम आपको ऑप्शन दे देंगे. तीसरा कोई क्यों प्रॉपर्टी खरीदे जब अपन तो नहीं खरीद सकते प्रॉपर्टी, right? So these are ways through which we can monetize together and build large platforms, so we can come in as co-investors with you as well in certain assets. अगर आपको खरीदना है कि अगर 50 करोड़ है आपके पास 25 है तो मैं 25 लगा सकता हूँ आपके साथ, and we can coexist and own the asset together. So these are ways through which we can associate and operate as well.
So just one point to add, actually, I think I've seen a regime of the mutual fund industry where a lot of people used to say mutual fund kya hota hai, FDs are the best, and when I started my career. And the pitch which you used to actually use in asset mutual fund was, you just start with a 5,000 rupees SIP. If your portfolio is 5 lakh rupees, forget we don't want the 5 lakh rupees. We just want 5,000 rupees SIP to come over and see where Mira asset is right now. It's a 1 lakh crore plus AMC. Here, the same mindset is that somebody who's an HNI, HNI, know there are different categories of HNIs right now in the banking space. But I still say every portfolio should have a fractional ownership in some or the other format where it's a stable and regular income. There, I think the scope is fairly high for the industry to grow. Not putting all eggs in one basket, that's a phenomena for every investment manager to say. And we believe the fact as PROPCATALYST that we really want some part of your income to taste the regular income, taste the upside, and definitely you'll grow your portfolio in the near future as well.
Thank you, Ankush.
Sunilji, we'll take 3 questions. Okay, Mukeshji has first question.
Good afternoon, everyone. This is to Sudarshan ji. You said fractional owning of the real estate. I come to the other part of it. Can I mortgage that real estate? And what happens if I default? See that everybody wants to exit as soon as possible. So maybe I don't have liquidity after a year's time or 2 years' time and I want to sell it off. Or I have raised it by way of bank loans. What happens then? How do you counter that?
Got it. So, firstly, never take bank loans in today's time. It's too expensive. It's not going to make any sense for you, even in later dates. So, 2 parts to your answer. So, first, we created, we were supposed to launch, and then RBI increased the repo rate, because of which the LRD became expensive. So, last 2 years, because it is too new for a bank as well to understand what we do. So banks were not even letting us, in spite of us having one of the largest bank as our shareholder, that bank itself was not ready to give because RBI does not permit as such, right? Per se, or it was too new for them to understand in general. But now, banks are realizing how big this is and how fast we are in terms of our turnaround, right? Like for instance, अगर आपको 50 crore लगाना है, आपको शायद 2-3 महीना लग जाता है because of the data and the network we have and our investors. For us, a 50 crore investment is literally 3 weeks, 4 weeks away, and we can close the deal and register the asset as well with due diligence, everything put together. So, point which is there is we have now banks who are ready to do LRDs. So you don't have to take mortgage. The property is already at mortgaged. So आप 25 लाख लगाते हो या 50 लाख लगाते हो, आपको 1 करोड़ का स्टॉक मिलता है या 50 लाख का स्टॉक मिलता है. So your returns are going to be for that, but your investment is only 50% of that, or whatever, 40, 60, whatever the LRD rate is at that point of time. Second, again, we always tell people that you should have a 5 to 7 year mindset. So अगर आपके पास 1 करोड़ है और आपको चाहिए वो 1 करोड़ 1-2 साल के अंदर, you should never put that money. It's totally not worth it. You have much better asset classes जहाँ पे आप better returns कमा पाओगे in comparison for a shorter tenure. Because let's say real estate as an example, whether it's residential or this, property बढ़ने के लिए, price बढ़ने के लिए time लगता है. You're not investing only for rental returns, you're investing for appreciation as well. Property को grow करने के लिए, micro market को mature होने के लिए 5-7 years भी लग जाता है, right? Like let's take Outer Ring Road as an example. When RMZ built the first, I think 30 rupees में lease किया था, आज 110 रुपए रेट चल रहा है. But वो journey from 30 to 110 has taken close to about 8 to 10, 11 years, more as well, right, for it to do. So अगर आप 1-2 साल के mindset में पैसा लगा तो लगाए क्यों रहे हो? You put in your FD and keep it with yourself, or buy some bonds जो आपको 8%, 7% का return दे देंगे, because you are clearly not here for appreciation. Then why are you even deploying money? So if you don't have that wallet share mindset कि मेरे को 7-10 साल के बाद ही चाहिए, this part of the wallet share, only that money we tell people to put, not the short-term mindset money.
Okay, we have one more question from the back side.
Hi, my name is Vishnu. Sudarshan, I just want to have this question for you. You mentioned you made an investment in Jaipur. 2 questions. One, are you seeing traction in tier 2 cities as against tier 1 cities? 2, I think you mentioned the minimum investment is 25 lakh. Can we use technology and go down as the minimum investment as say 5 lakh, which will involve more participation?
Got it. So tier 2 is a great opportunity. Honestly speaking, like Jaipur, we want to go very, very aggressive. I think it's a very, very large opportunity. It, in my opinion, will be the new Gurgaon over a period of time with the kind of, in fact, if you go now and see Jaipur, you'll find less Marwadis and more other community people as well, right? So it is becoming a very cosmic city in itself, right? So Jaipur is one. We're very, very bullish. In fact, we are doing a road trip for almost 10 days to entire Gujarat, especially Dholera, Dahej, Sanand and Mundra area, because we feel that the whole industrial opportunity over there is phenomenal, and it's a 25-year investment.
And is
which
that
will-
community ready to invest in this asset?
So I'm saying when I invest in Hyderabad, I'll give you an example. So I'm not getting Hyderabad people who are deploying money in India, right? In Hyderabad. So when we did a Hyderabad property lease to Swiss Bank, so it was a 44 crore deal. 3 crore मुझे हैदराबाद से आया. बाकी पूरा दूसरे part of India से है, Bangalore से है, Bombay से है, Delhi से है, Guwahati से है, I don't know where not, right? So we are bringing money, people like for instance, you know कि Gujarat is a great opportunity. आप कैसे लगाओगे, आप कैसे find out करोगे, क्या laws है, कैसे करोगे, right? So when I bring as a platform and say, okay, let's invest in Dahej, we have Wipro as our tenant, 30-year lock-in, let's invest into an API manufacturing facility with them because that's the industry over there. You'll want to because you always wanted to put money and you never had the opportunity. So people are now keen. हमने जब जयपुर किया था, so usually for us to fund a 20 to a 50 crore opportunity takes us 10 days. Jaipur took us 4 weeks and we knew it's going to take time because it's new asset class in general, right? We never expected Jaipur के लोग जयपुर में पैसा लगाएंगे because it's very difficult. But we got people from all over Bombay, Calcutta, people who put money over there because they knew the opportunity and they got an opportunity over there. But it took time for people to understand how we're going to do it. It's so new market, etc., right? We are seeing that investor sentiment changing because those people who are deploying money with us are, let's say, person who are working in IT. He's sitting in Jaipur only and working क्योंकि वो आ ही नहीं रहा यहाँ पे बैंगलोर में और काम कर रहा है, right? Because he's doing work from home and he's saying कि मैं पैसा तो बैंगलोर की सैलरी में कमा रहा हूँ, but मैं खर्चा कर रहा हूँ जयपुर में. So there is consumption also which is growing in tier 2 market. Like I'll take Kochi as an example where we are doing our warehousing development very soon. Kochi में you'll be surprised 1.5 lakh लोग reverse migrate किए हैं from everywhere of the world into Kochi this year, last year alone, right? 1.5 lakh लोग. Now we are talking about people, let's say from Middle East, talking from people from all over the metro cities who are saying I want to do because we work from home, I might as well work from Kochi as such. So Kochi ka consumption is going high. People are very happy to stick around. Lot of large development is also now happening in Cochin as comparative, right? So tier 2 is a great opportunity. It's just that it requires education because it's not so organized like Bangalore is. Approvals के लिए आपको 1 हफ्ते में यहाँ पे या 3 महीने में मिल जाएगा, वहाँ पे शायद 6 महीना भी लग जाए. So delay हो सकता है in those grounds, but it's a very, very large because labor is very cheap, everything is very cheap. Like Bangalore के कोई भी factory owner, if there are, of that top line, usually 5 to 7% होता है उनका labor cost, employee salaries cost, etc. यही गुजरात में 1 से 2% के बीच में, right? So clearly there is a large opportunity which you can do in tier 2 markets, which we are keen, but then it requires investor education, which will take some time, but we are very confident we'll be there very, very soon. So, 2 things, right? One, you have trust on us that we are going and searching everything for you. Second, हम लोग जो भी photos चाहिए property के दे देते हैं. Ankush brought in a very point. There is Google with you. Google Maps में डालो आपको आजू बाजू जो properties है सबके photos मिल जाते हैं आज के date में, right? So, what is great you're doing by going and seeing when you can physically sit at home and see everything, right? And we give that entire experience to you in and out so that you know कि बाजू में tenants कौन-कौन हैं, कितना rent दे रहे हैं, कौन कितने price में खरीदा. All that data is right in front of you, right? I'll answer your second question of the ticket size wanting to lower. I think we don't want to lower the ticket size, to be very honest. I think it is still a very nascent state, so we want more mature investors to understand this product more than immature because 5 lakh, 10 lakh opens a much larger spectrum and they are those people जिनका mindset होगा कि मैं पैसा लगाऊं second day में मेरा पैसा double हो के आ जाए. You know, the crypto investors, if I have to put it up that way. So we don't want that kind of investors because this is a long haul game. 12 to 14% kind of IRRs is what you can generate by not doing a lot of effort and just making passive money. So we want to be in that segment only. We don't want to lower the ticket size. And I would also urge that you should not lower for at least another 2-3 years before this becomes a 10-20,000 crore overall industry market. कि हाँ maturity है, फिर तुम lower करो इसके लिए.
I think we'll take the last question. Yeah.
Hello. Yeah, we'll take the last question. One second.
Investment is leading to a shift in the asset class. Basic from a real asset, you're moving to a fractional asset through a different mode. Do you think the bank finance is also moving in the same line? Because in future, now if you see, you get finance, one is the developer gets finance for whatever he's doing. Then again, retail investors also get a finance for buying the house.
So I think, yes, over a period of time, it's going to be a mix of alternate investments plus fractional. Plus, I think in terms of the bank finance over a period of time, it has started already moving. There are a couple of players in the country who are looking at fractionalizing or crowdfunding, whatever, however you can say that, there's different terminologies to it. But yes, over a long-term period, again, wherever you can create a value for the investor, a return for the investor, it already will be welcome in different asset classes. Here we are talking about like their respected company and ours as well. We'll be focusing initially on the commercial real estate and land, industrial land for sure. So, but banking has already started where you have funding which is being accumulated from different investors and crowdfunding models already there.
Okay, and one more. This same thing, can it be replicated for large land parcels?
Yes,
Fractional ownership?
it can be, because as rightly said by ANIKET and on detail, yes, that there is a huge opportunity in the industrial land parcel, yes. Again, this asset class really talks about regular rental returns as well at the moment. But we, as a group, yes, we will be coming up with opportunities which are on the land and definitely on the fractional.
And how about the market in upcoming cities in under NIC, DIC, DMIC, like Sir mentioned, Dholera Special Investment Region and other smart cities? So how do you think, would there be a shift in the market in the coming 5 to 10 years?
Definitely there'll be a huge
because
shift.
a lot of industrial activity is proposed and planned in those special investment regions and the greenfield industrial cities which are coming.
I think over a period of time, you will see that the trust of the investors, which are the base investors, as he rightly said, that the initial money which he collected from the investors today has given them a base of trust value. Now they've been giving returns for a period of time. In fact, all other players have been giving regular returns. So yes, there's going to be more trust which will be built in, and we will be looking at different areas in the country which are more prospective, right, where you get into an early stage kind of like Dholera, what he mentioned. It's a very early stage where people want to invest right now and see the growth story. So over a period of time, you will see the trust is there. When you say fractional ownership, it's not a new term at the moment, right? Everybody knows, every developer is talking about it. Every fund house is talking about it, that fractional ownership is, yes, it's known. And definitely by STRATA, yes, was doing a great job. But over a period of time, people will be able to take some kind of risks as well, which will give them higher returns in the long-term future as well.
So, Darshan, you have something to add to that?
I'll just add a couple of points, especially Dholera, right? So when we started, we invested in Hosur as a market, right? आज होसूर में हमारे पास 28 लाख स्क्वायर फीट warehousing और industrial space. We created a market. Half of the people in Bangalore, or people who deployed money, didn't even know where Hosur exists. Right? Everyone thinks it's Bangalore. Technically, for all practical purposes, आप बोल सकते हो, but है तो Tamil Nadu. And why Hosur is growing is because Karnataka's deficiency, right? Because you are not promoting industrial development in large way, right? I tell you from a theme, you brought in कि 5-10 years mindset अगर देखते हैं smart cities are thing, I think बहुत बड़ा फसाड़ है, कुछ नहीं होने वाला. जब तक government कुछ नहीं करने वाली ना, कुछ नहीं करने. And that's when players like Adani, Ambani's are doing great job. कि मैं 5,000 एकड़ खुद खरीदता हूँ, मैं अपनी smart city खुद बना लूँगा, तेरी ज़रूरत नहीं, तू support कर दे बस, right? Like for instance, when you talk about industrial development, right? We're talking about China plus one. Everyone keeps talking China plus one. India बहुत manufacturing growth करने वाला है. अपन 5% भी नहीं कर सकते जो China कर सकते हैं. कभी भी. Next 10 years भी नहीं कर सकते. Unless government really doesn't take effort. I'll give you an example. We have our tenant called Microplastics. They make toys. Correct? India exports $200 million worth of toys. China exports $20 billion worth of toys. Correct? Because of the whole China plus one, पहले अपन अपने इंडियन कंपनीज दो ही है, एक एकीस करके जो हुबली में है और दूसरी माइक्रोप्लास्टिक जो कर्नाटका में थी, अभी तमिलनाडु शिफ्ट हो रही है because of all reasons as such, right? Now, point being, these guys are saying कि हमको grow करना है, China plus one के कारण कंपनीज आ रही है उनके पास और बोलते हैं ये लो ऑर्डर लो. पहले लोग जाते थे ऑर्डर लेने के लिए, वो लोग लेते नहीं थे because of the whole China plus one. People want कि हाँ चलो we should not have dependency only on Ankush. I should have somebody else also as a partner, not China, but I have to have somebody else who has the capability to do it. आके आपको कॉन्ट्रैक्ट दे रहे हैं. बोले आई हैव अ कॉन्ट्रैक्ट वो सेज कि मेरे को 21,000 टन का टॉयज तो मेरे को हर महीना दे. उसकी कैपेसिटी 11,000 साल की है. करेक्ट? 8 लाख स्क्वायर फीट का हमारा फैसिलिटी है. चाइना में वैसा ही सेम वन ऑफ द लार्जेस्ट प्लेयर हैज क्लोज टू 80 लाख स्क्वायर फीट वन फैसिलिटी. करेक्ट? सो व्हेन यू आर टॉकिंग अबाउट ट्रू सेंस गेटिंग लैंड्स फॉर 80 लाख स्क्वायर फीट, कौन सी गवर्नमेंट आपको दे रही है? करेक्ट? सो गवर्नमेंट पुश इज वेरी इंपॉर्टेंट. सो स्मार्ट सिटी is only going to be a true sense. It can be an industrial smart city. It does not have to be a smart city where only office spaces exist, right? If you have to put smart city, Outer Ring Road is a very smart city in itself, right? But very pathetic infrastructure. For what reasons are you paying 110 rupee rent when you don't even have the infrastructure to give that kind of support to them, right? So point being, unless government's push is not, so you should keep tracking which government is very proactive, where this can be a reality, and you need to invest before it becomes a reality. So when we invest in Hosur, everybody laughed at us that kaun jayega Hosur mein, right? But today look, 28 lakh, or within the next 2 years we'll have close to 60 lakh square feet of warehousing and industrial development in that market. We created the market because we could see early signs of how things are moving where there are difficulties over here. So if you're talking about smart city, please follow the trends, early trends of what is happening, which industry can operate. Like for instance, you can never have a large steel factory, pipe factories at scale. You can always have in Gujarat because your labor cost is very, very cheap. Power, electricity, utilities, what Adani is built of. जैसे भी हमारे facility में 3 factories है, तीनों के separate boilers है. Boiler का approval लाने के लिए इतना time लगता है. अदानी ने इतना smart काम किया, उसने एक बड़ा boiler लगा दिया कि आओ pipe लगाओ और boiler as a service use करो तुम लोग. Correct? So that is infrastructure. Right? That is the facility what a smart city can be built, unless the government doesn't or private players do it. So you then co-invest with private players, whether it's Mahindra Life Spaces who is doing very large in industrial, and then you create a large game for yourself. So that's the way you should look at. Follow the trends, don't just follow what somebody else is doing.
Thank you, Sudarshan. I think we're shooting up on time. Ladies and gentlemen, big round of applause for the two of them. I think they're right here. If you have more questions on fractional real estate, they'll be happy to answer. And if you have money to deploy also, they're happy to take it.
Check. All right. Can I please request Praveen Ji Shah, Rajesh Ji Mutha, Subhash Ji Khivesira, and Siddharth Ji Patwa to please step upon the dais to felicitate our eminent panelists. Giving a huge shift, mind shift to all of your perceptions in terms of how investment can be done and should be done. This was a very, very interesting panel, and I'm sure none of you wanted this to end. Can we have a round of applause for all of them, please? Come on. A louder round of applause would be really nice. Come on. All right, ladies and gentlemen. Now moving on to our last panel discussion for the day, which is attracting investors' money. And to moderate this session, can I please invite Mr. Kuldeep Jain, who is an entrepreneur, real estate investor, angel investor, and founder promoter of Rank Group. He himself has developed 5 real estate projects in Mumbai and spotted immense opportunity in raising finance for this capital-intensive real estate industry. In this last 12 years, with the help of a team of 8 team members, Rank Group has advised and raised 18,000 crore across over 275 projects, which is commendable. Ladies and gentlemen, can we have a round of applause for it, please? Recently, Rank Group has started investing in real estate projects through their own platform as seed investor in 7 real estate projects and angel investor in 4 startups. His platform has taken exit from 3 projects with an IRR of 24% and above. He's an avid reader and a cricket enthusiast. Please welcome Mr. Kuldeep Jain with a round of applause. Our first speaker for this panel discussion is Mr. NIHAR Thanawala. Mr. NIHAR is a director and with MOTILAL OSWAL Alternatives and is responsible for investments, asset management, and exits for real estate funds. Prior to joining MOTILAL OSWAL Real Estate, he has worked with ASK Property Investment Advisors, focusing on real estate, private equity, and EY, where he consulted clients across real estate, financial services, and retail. THANAWALA is also bringing to you with him the entrepreneurial experience. Can we have a round of applause for him as well? Our second speaker for today is Mr. Shreyans Mehta, who is a symbol of youthful energy and talent at JAIN Housing and Construction Limited. JAIN Housing and Construction Limited was incorporated and established in the year 1987. Headquartered in Chennai, the company holds a preeminent position of leadership in South India's highly competitive construction industry. JAIN Housing has delivered 15 million square feet across 200 projects and another 12 million square feet under various stages of construction. Mr. Shreyans is a graduate from Warwick Business School, UK. His ideas, as dynamic and vibrant as him. Add great value and management at the JAIN Housing. Can we have a round of applause for him as well? And the last but definitely not the least, we have Mr. Om Jain, who is an MBA from University of Wales. He's an entrepreneur since 1985. Mr. Om is into debt syndication and is an MRICS along with trustee in many temple trusts. He has received Rashtrapati Scout Award from President Dr. Shankar Dayal Sharma, more than 15,000 crore debt syndication, and is known as the deal maker in the real estate field and has been instrumental in felicitating land deals in 3 years. Can we have a round of applause for him as well? Audience, I know you'll need fuel, but we'll need fuel as well. Come on, round of applause for them.
First of all, thank you, JITO, for inviting us and giving this opportunity. I thank NIHAR for on a holiday coming from Bombay to Bangalore for attending this conclave, and Shreyans from Chennai coming to Bangalore to attend this conclave, and the OMG too. So our topic is raising money from the institutional investors, utilizing that money and taking how to be that boy who is being loved by institutional investors. So NIHAR, you being on the one side where investor gives you money and that you put that money for the deployment, what all aspects you look when you putting money? And what commitment you give to your investors, these types of people we will be selecting.
So I think, see, we raise funds, right? And every time we raise a fund, it is always based on a certain strategy and where we think there's an opportunity in the market. For example, we have 5 funds right now. All the first 4 funds that we had raised were to invest in growth and land acquisition. The 5th fund that we raised 2 years back was to invest in ongoing projects. The 5th one was clearly an outcome of what we saw in the market, right? Since 2018, there was a slowdown in funding. Then COVID came. So pretty much in end of 2020 and beginning of 21, we started the fundraise. And this was a different strategy. So one is that every time we raise a fund, there's a certain strategy that we have in mind. Based on that, we have a calculation of what kind of return we can generate. Right? I mean, of course, if you're doing land acquisition, there'll be more return because there is more risk. When I'm doing an ongoing project, there will be little less risk, so little less return. So based on that, we go to investors. So the entire commitment that we make to our investors is a function of what money we are raising. And then that's when we tell them that this is what we are raising for. And this is how we are going to invest and get the return over a certain time period. As far as what kind of projects we would want to do and what kind of, so we are purely financial investors. So we invest with partners, developers who actually do the projects and give us an exit. So one thing that has remained consistent, independent of what is the strategy of the fund, is what kind of partners we would want to select and generally what kind of projects we would like to do. That is a function of a lot of experience and brainstorming at the teams and on our end. In terms of what works. To give you a small example, for us, 60% importance is who we are partnering with. Project is important, but if the partner is not right, and when I say not right, it's not about one thing. There are various things that you want to look at. In terms of balance sheet, in terms of experience, in terms of the specific project that they're doing, experience in that, right? For example, you may be working with the largest developer of, let's say, Bangalore, but you may not be very comfortable doing a deal with them in Hyderabad suddenly, especially if it's a first deal. You may be okay going to a developer half their size in Hyderabad, but who's a Hyderabad developer to do that. So it's very, to some extent, is subjective, but the focus is partner selection. So those factors have remained consistent, independent of our investment strategy, where we follow that certain criteria and a certain guideline. And that has actually, over a period of maybe 10 years, we've done about 120 investments. We've got about 50, 60 exits. And on an average, we have generated at an investment level IRR of 20-21% across all 50 investments. I'm saying average. Some may be 2-3% lower, some will be higher based on the specific investment. But this is the average return that we'll be able to generate, keeping these factors in mind.
So taking this to ahead only, last 10 years, industry has evolved a lot. Now it becomes more of manufacturing industry, cash flow management. So how you think developers have to evolve from the governance perspective and from the team perspective? During my last 10 years, I have found there are 4 people in the organization who are building a lakh square foot, 2 lakh or 5 lakh square foot. But looking at post-COVID and current competitive strength, how you evaluate and map those aspects, how you bifurcate a good SME developer to average SME developer?
So I think the one big change that has happened, and COVID is, with or without COVID, I would say, is that in the last 10 years, right, pricing has not moved up the way it used to. And the minute that happens, the huge influx of investor money that used to come in the 90s and even maybe in 2000s, that is going to stop. Land trading was the primary way in which people used to churn and make money, right? Where you didn't need an organization. Half the money was made because the land was bought at a certain value. 3 years later, it became 3 times. Now when you do a project, you are just monetizing. You already made your money actually after 3 years. Today, that whole thing has changed. If you buy a land, that capital is not easy to come by because now you cannot do the way one could do before era, for example. Second, that appreciation is not there, so you cannot commit to your investors also that I'll give you this much, and you cannot have them flip the way they used to earlier. So you need to now get proper capital to buy land. After doing that, you have to run the project, get your approvals. There's a fair amount of organization and regulation that prevents you from kind of not following the process, which means you need organizational strength. You need teams. You need a machinery, right, to run the show. You need, so now having the direction from the promoter is important. But if there is no team and competency below, it's very hard. Just some time back, the last discussion, somebody asked about tier 2 cities, right? So I'll give you a small example. There's a huge opportunity there, and we've done some work in tier 2 cities. The biggest challenge though, right, is to find enough and the right talent for a developer to become properly professional and organized. Because most of the talent is getting migrated, even now, to the larger cities, right? Especially with this whole IT thing and all that is happening. So they are actually seeing an opportunity, but they're not able to capitalize the way they would want to, because it's difficult to build those teams. Even in tier 2 cities, there is a requirement, there's a team. So when you have this, there is no option but to focus on things like governance, because no employees will want to come and work when there is no governance. Everybody is looking for growth. From a general awareness perspective, investors are asking questions. What are you doing on ESG? What are you doing on sustainability, CSR? Is no longer become a tick box actually. As a fund, we are also talking to investors, large investors. Earlier, these kind of requests or queries used to only come from offshore investors who want to put money in our fund. Now, even large family offices in India are asking that as a fund, what are you doing for ESG? As a group, what is Motilal Oswal doing? So I think the whole mindset, right, is changing a lot. And if people don't adapt, they'll be left behind very easily.
So consolidation, institutional partners, all are required. And you, Shreyansh, have everything in the kitty. Lot many projects you have delivered and a lot of institutional partners you have. So how institutional partners helped you, to take to the next level as an organization? Second, there might be a cases wherein, you are running within a fixed meter and regulatory risk has, come into the picture. So how do you mitigate those risks of, institutional investors के साथ साथ में आपने project के अंदर कोई regulatory risk आ गया तो how you mitigate those risks and what are the benefits and negatives of having institutional investors on board?
So to start off with, I think it really depends on the stage of the project, that how much risk is there in the project, like rightly pointed out by Nihar, that at land stage and greenfield stage, there is a lot more risk that a developer has to take and the institutional investor has to take. So when we take a greenfield project or a land stage and we ask an institutional investor to come in, we understand that there's a lot of uncertainty in the timelines of getting approvals in our country. So that's really important to kind of communicate to the investor time to time and keep them updated, and that gets factored into their financial model in terms of giving the right moratorium or defining the right moratorium in terms of principle. So so that the timing of the project is rightly defined and the risk is kind of reduced in terms of the expectation of the cash flow from the investor side as well. So I think that's one way to look at it at the greenfield stage. And in terms of if it's an approved project, I think the risk is in terms of only construction and sales. So I think having a good contractor and a strong procurement team does 50% of the task, and the right direction from the the developer sometimes tend to draw much more than required at early stages of the project, which kind of leaves the developer with less credit line available towards the end of the project, kind of putting the project and the investor at risk. So I think developers need to kind of time and absorb only the required amount at the right stages of the project, which will ensure at that stage that the project is kind of doing well and there's no leakages of funds at early stages of the project. So, and in terms of, later stage, advanced stage inventory, I think the risk is only in terms of sales. So as long as the investor and the developer has kind of penned down the cash flows and sales projection at an initial stage, and both the expectations of the investor and the developer are in the similar lines, I think it's going to be a successful partnership in terms, as long as the developer is achieving the sales milestones. So I think there are ways where a developer can mitigate the risk while having a clear communication in terms of what is the expectation between the investor and the developer from the start. That is one, and I think compliance and reporting on a timely basis or a regular intervals to the investors plays a huge role in terms of carrying out a good relationship and long relationship with the investor. That gives them a lot of comfort, and I think those are 2-3 key points that we at our organization kind of follow, and maintain a long-term relationship with most of the investors, institutional investors that we have on board. And coming back to one of the questions that you asked, are how important are institutional investors for organizations like us? I think they're very important. I think most integral part of the growth for the business. I think real estate being a very capital intensive industry, I think without flow of capital from time to time. It's really difficult to grow without the help of investors. And especially, I think, apart from the investors choosing the partners, I think it's really important for the developers also to partner with the right institutions, because it's not one way anymore. I think it has become kind of a mutual relationship, because today doing one transaction, giving an exit, and then never partnering again with the investor is also not really fruitful for either of the parties. I think it's really important that both the parties kind of understand the expectations of each other and kind of continue to do business where both of us are making money. I think that's most important. And in long run, I think investors would definitely be required at every stage of the cycle.
As you said, cash flow. Last week I was sitting with one developer where we are planning to do certain investment. He told Kuldeep, 6 साल पहले मैं जिंदगी में पहली बार cash flow क्या होता है वो लेके किसी banker के साथ बैठा था. And the once he entered into my life, he became an angel for me, because post that, taking a 60 crore rupees, we regularly used to monitor cash flow management. Budgeting क्या होता है, forecasting क्या होता है, I'm 8 past, I don't know. But that banker taught me. That's how, both become a partner and grown to the next level. Omji, you have done a lot of real estate advisory and all. What are the factors a developer should determine or keep in mind while taking institutional money, and how he should pen out, because it's a journey of 3 to 5 years within one project. So what are all the key factors he should be determined, and this should be the principles this he has to follow. What are those key traits?
Thanks, Kuldeep. Thanks, JITO and our JAIN family to give this opportunity. With my experience of last about close to 15 years, I would like to say this is a very, very important point, because generally the first thing which comes from builder or any borrower for that matter is what is my rate of interest. But I will tell you that that is the last factor you should see, but that becomes a prime factor for most of them, because the only thing which most of the people look at is the numbers. But I'll tell you the different scenarios. Interest rate is important, but where and where not, that is what you need to understand. If it's a pure commercial LRD deal, then rate of interest is the only thing which you need to see. Client is in place, property is in place, rental is assured. There's nothing else which you need to determine. Just the best rate of interest anybody can get you, because the rent is going to repay your loan, not really your cash flow which is going to repay the loan. So there, but where not? Now you see a person who's taking a real estate loan for residential needs to determine many other conditions, like what is my tenure of the loan? Tenure for a builder, like, since all of us are mostly from Bangalore, let me give you an example. A tenure for a bigger developer who does a project in a given timeline, say a Prestige or Shobha or Salarpuria, say they plan for 3-year or 4-year project, they'll surely complete. Now you take a case of Total Environment, he will do the same project of his quality, his product in not less than 6 to 7 years. So will a loan of 4 years given to X developer, will it suit to a Y developer? Surely no. So for him, a period becomes a very long. And that's where what happens is, if you don't select a tenure right, you'll end up only paying the interest for the funder. The lenders are really going to make money, not the developer. So tenure becomes a very critical thing. Other important thing is the security. Now some lenders take only your project as a security, some demand for an additional security. So you also need to figure out who can partner with you for your own land, for a joint development land. Third is, builder need cash outs. At the initial stage, they would have put in all their equity in one project or two projects. If they can get money, little bit, some breather, not just for the project, but little breather for themselves, they take that money out and then they can invest in other projects and grow, as long as your cash flow of that project is supporting your repayment and your construction both together, without hurting your project. If you can have some breather, that cash out helps you a lot to grow your business, but it has to be limited. If your emotions are coming in picture and you feel there are many opportunities of land and I should just buy, that is where the RERA has come in place to make sure that you don't really do a cash out, and the project should never suffer and neither should the customer. Other important point is how should be your repayment from your cash flow? What percentage of your customer collection should go for your loan repayment? These are things which generally people don't see, but it becomes very crucial, because if you're paying from day one, say 30%, 40%, is different from paying 10% initially, then gradually when your sale grows to 30%, 50%, then you start increasing your percentage, so that your project, the first important point, whether it's your money or the lender's money, is to make sure that first project is in place, customers don't suffer, and the moment you're able to do the project in time and your sales are progressing really well, then your project will never suffer. So it's very, very crucial for you to see that point. Other point which is very important and a lot of people don't see and suffer later is your prepayment charges. Now what happens is a lender just normally are habit of putting 3%, 4% of a pre-closure charges, which people don't realize because they feel my project will pay, customer sales will happen. But now imagine a situation like not just Corona, but it could be any other NGT issue where project is delayed, or RERA or GST or demonetization, something which is beyond your control. Then what happens is your timeline for that loan is over. So you'll have to do a takeover. Now takeover is not going to be easy. If you have a 100 crore loan, your prepayment cost is 4%. It's not going to be easy. 4 crore shelling out here, giving another processing fee, other cost. It's not going to be easy. So these are just few things which I'm telling you, but there are plenty of things which a sanction really needs. A builder and a developer, any builder or developer tying up with a proper lender is very important, along with the proper terms. Because if you do that mistake, you really end up suffering. And if you are suffering, then you are hundreds of customers suffering, your lender is suffering. So it's very important, crucial for you to understand what kind of loan you're borrowing. That's where, like I'll tell you example, for RMZ, we did a LRD loan, took over from ICICI Bank and gave it to Syndicate Bank in 2011. It was 475 crore, a simple LRD loan. 2% reduction in rate is like 5 crore, for 10 years is like 50 crores. So there it is only reason is to see a rate of interest, nothing else to be seen. But I don't want to name, but there's another mall who has taken a loan for a lesser tenure. Now, they could not complete a mall within that given timeline. Neither they should have taken nor the lender should have given that such a short of time. And finally they suffered, and for last at least about 8 years they are suffering now. So I would say it's very important, and that's where people like us come in a play, where we make sure the overall sanction is taken care and you don't suffer. And I can proudly say, out of raising that 15,000 crore, we have 0 default, 0 NPS, 100% loans are repaid. Thank you.
So NIHAR, you want to add anything into it?
So I think he's absolutely right. Rate of interest becomes a starting discussion almost in every case. And I think it's important, but what happens is when the discussion starts from there, it becomes the only point then. So looking at anything holistically is very important, especially from project to project. Like in the last 2 years, majority of the work we have done is with literally very, very good developers in very good projects where we have been refinancing loans because something went wrong in between for 6 months. And now there is a pressure and all money that is coming from collections is going towards a sweep. And project is suffering. And as a result, the average maturity is going up. And as a result, though the percentage may be lower, the actual interest cost being paid on that project over a life has gone up significantly. So one is that, right? Second is also, my other point is that it has to be looked at as a long-term relationship. Eventually, there is going to be trust that will drive most of the engagement in any project. The first one is required to build it, but after that, you will need that faith to keep moving and doing more business. If the developers want to grow, for example, I gave you an example some time back, right, about going to different cities. We were working with a developer in Chennai over many, many years. And we then funded their first or second project in Bangalore and their first project in Hyderabad. And we gave them land acquisition capital. For somebody who's entering a market new to get land acquisition capital is not easy, but that is the relationship that drove there. Now, maybe they paid 1% or 2% more in some transaction, but in the long run, it didn't matter. So I think that is very important to understand, that what is the relationship that you're building, what is the comfort you have with that lender. And more importantly, depending on the end use, you need to choose, you need to have my view is every developer needs to have a mix of capital. If you are going to take construction finance, you should be going to a bank or an NBFC, because it is exactly what meets the requirement. You don't require much leeway. You just want to complete the project. It's maybe one step above LRD, where you need simple capital. But if you're looking at doing anything which is a little different out there, then you need patient capital. You need capital which is a little bit more flexible. So somebody like a fund, like what we have, is a better one because we have more leeway. We are not governed by, how we have funded our NBFC, what asset liability mismatch we may come up with, what is our leverage. No developer knows that what is an NBFC's leverage. Now after 2018, whichever NBFCs had 1:10, 1:6, 1:8 leverage, they had to immediately recall loans. Developers didn't even know that this could be a challenge. Now, if you do that for capital, which is where you need flexible capital, and you took a call that somebody give me 2% lesser, I took it. Eventually, they're going to raise 2% or 3% when their times become tough, or they're going to not fund you further capital because they've suddenly gone, quiet. So you need somebody who's going to be able to absorb. Funds in a situation like that can do it far more easily because they have raised third-party money, and there are no commitments on the back except for returns that they have given guidance for to investors when raising funds. So it's important to have a mix of different capital and wisely use different capital for different purposes, rather than just going by a rate kya hai approach. I think that's what I would like to add.
To just sum up इन दोनों की बातों को simple तरीके में, you need to understand which part of the balance sheet capital you have. Either it is quasi, either it is senior secured debt, or it is normal working capital. If you are in the quasi space, then you cannot serve even monthly. अभी monthly service करने के लिए we did one transaction wherein developer got 95 crore sanction from State Bank of India at 9.5. You believe me, guys, we have given 180 crore rupees at 19%, and project is up and running. If he has taken 95 crore, that project 30 या 37 स्लैब के बाद बनता ही नहीं था. SBI 25-30 करोड़ 35 करोड़ डिस्बर्स करने के बाद में बोलता आपका न तो कंट्रीब्यूशन आया है, न सेल्स हुआ है, प्रोजेक्ट बनता ही नहीं था. एंड योर रियल एस्टेट इकोसिस्टम कंप्लीट्स व्हेन प्रोजेक्ट गेट्स delivered. Everything gets short out, if projects get delivered. So if you're in the which space of the balance sheet, you need to understand very well whether you are at quasi stage, whether you are at senior secured stage, or whether you are at working capital stage. Wherever you are, according to you, your rate and flexibility, determines. Second aspect is financial closure. वो banker का power 25 crore है, boss 45 crore का requirement है तो 45 crore लो. Struggle 15 days more, 30 days more, but do the financial closure. That's an utmost requirement. Do the financial closure. If financial closure is not in place, bringing another equity or bringing more sales is going to a challenge, because you have to, for sales, you have to, थोड़ा सस्ता बेचना पड़ेगा तो वो बोलेगा इसमें MSP नहीं आया, ये नहीं हुआ, वो नहीं हुआ. So these are the very, very basic fundamentals. Stick to it and make sure whatever document you are signing it, just read. It's a 3-4 pager. Don't say बाद में कि वो हमने पढ़ा नहीं था. He rightly pointed out कि I did one trade in Bangalore around maybe 6-7 years. One of the large developer, he has signed a term sheet with a 3% prepayment. We given him an exit at 150 crore. He paid 5 crore rupees plus service tax. मतलब वो मरता क्या ना करता वो वाली एक अलग बात है, बट 3% का डॉक्यूमेंट ही क्यों साइन किया? And it's a very, very basic. You take proper advice and understand that aspect. So Shreyans, now institutionals, large institutions are coming. Lot of technology requirement has come in the real estate side also, be it on the CRM side, be it on the human angle. When you do, multiple projects, how you are monitoring the project, cash flow, technology shift of the, during the human resource sides, CRM side, and how this, disruptive things you shaping into your real estate domain?
So I think technology plays a very major role in terms of managing the assets correctly. And as you said, today there are a lot of CRM softwares and a lot of artificial intelligence softwares that's come into the market, and specifically into the real estate market, and customized to the real estate space, where I think these softwares have also gone through a phase of learning the real estate market over the period of time, and kind of providing exactly what the developers are looking at today. So for us, managing the kind of volumes over the multiple cities that we do, and it's majorly because of the ERP softwares customized to our requirements that kind of helps us through the entire process. So if there is something that's happening in a project in Hyderabad, getting a real-time update on our dashboards is very important today. And because real estate is very dynamic, and if not looked at on a real-time basis, can go up and down without even realizing, because with all the regulations that are coming into place in terms of timely delivery and RERA and complying with so many timelines that is there in terms of statutory quarterly reporting. So I think it's not possible for just human resources to kind of manage and do everything by themselves, preparing such reports. I think technology does play the major part of the role. And post that, I think, of course, still real estate is human intensive as well. We cannot leave everything to technology as yet, but I think both play a major role. I think adapting to technology is very important in today's scenario, to manage large number of volumes, large number of projects across cities.
NIHAR, you have invested in various large developers, mid-sized developers. Can you share some successful stories, you being onboarded, plus technology things which they have adopted, and how how they have got more successful closure of the successful getting construction track record fast हुआ, जिससे आपका return on equity has also increased. So some of those kind of examples, and some of the kind of examples, so like Motilal Oswal has raised 250 crore rupees for Sapurji Palanji in a week's time, and that too over a Zoom call. So how large institution plays a great role. Even Sapurji Palanji is in a very big institution. Motilal Oswal is also a big institutional investment. So recently they funded around 2-3 weeks back. How large institutionals plays a larger role for the developer, and second, larger developers, what technology, with your interaction, you get to know what technology things they are putting in place, which even a normal mid-sized developer can, adopt.
So that I think two main areas where at least we have seen, developers use technology quite extensively. One is on the sales, CRM, and marketing front, where I think there's been a huge shift, and because of COVID, there's also been a lot more acceptance from customers, to at least cover some distance of a sales journey without being on site in person. Eventually, even today, majority decisions are done on site, because without a visit, nobody's going to buy a home. It's a very emotional decision. But at least a lot of the journey is covered. Now, how to get that journey and how to get more customers in is where we have seen a significant difference, right? There are some developers who may not be very large, in the sense that, they may be known in specific markets. But we have seen that they have incredible sales in the projects that they operate. vis-a-vis some other larger developers also who don't have that kind of a sales, but they just have large projects and volumes going on. And the difference is how they approach and how they use technology in their sales. I mean, there are various things that they do, but effectively, in terms of acquiring that customer's, mind share and creating that buzz, right, before launch, determines how well the project is going to do and when it gets completed. Because if there's a project where a developer achieves 40% sale, I'm giving a broad thumb rule, but if they achieve 40% sale in the launch quarter, that project financial closure is more or less in place then. And as a result, what we have seen is smarter developers realize that, and they're okay to go down on pricing. They're okay to pay more brokerage if need be, but they want to achieve that number. And they somehow achieve it, and then they know the project is pretty much on autopilot after that. Because then you can easily get a lender to sanction the line as a backup. They hardly ever draw part of the line. They'll sanction 100 crores, they'll draw 20 crores, but they know it is available if they need to. And now it's about receivables kicking in. So that is one part, and the other part is on construction. There we have seen that certain developers, it sounds astonishing, that a same structure is being built by one developer in 2 years and some other developer taking 4 years. I think one is technology, right? There are various technologies that can be used, but more importantly, I think it is also the execution mindset, right? Where you go all guns blazing, you don't stop. They appoint all contractors in one go, they finish it off in one go, and they have a parallel sales machinery. So the in and out period, right? If it reduces by 1 year also, a rough math says that if you reduce your turnaround time of a 5-year project by 1 year somehow, you are adding about 4 to 5% to your bottom line of that project, just by reducing 1 year. That difference they're able to achieve. So I think these are two areas, right, where we have seen that people are using technology at different levels, right, to monitor, to make sure that, there are early signs of any issues coming up through technology and they can fix it immediately. They have live video capture of what's happening on a construction site. So I think a lot of different things are being used eventually to achieve efficiency and shorten the time frame of a project turnaround.
So, technology coupled with system, processes and checklist and strong follow-up, because real estate के अंदर follow-up भी बहुत strong चाहिए हर चीज़ का. So, I wanted to understand one more aspect. One aspect you covered is technology. Like, you partner with someone 8 years, 7 years back, and he was just in a, 7-8 lakh square foot deliver kiya hai. And with your journey with him, and he has grown multifold. Some of those experience would you like to share?
So, when we've now been in the business for 10 years, and we have focused on land acquisition early on. And we also target a certain return, right? I think that is also one important aspect. So in the initial years, I think, like you said, Kuldeep, we had done a lot of investments with few developers, and our mindset that we want to continuously do more work has been there from day one. Whenever I, we meet with Omji also and we discuss, I'd keep saying one thing, that sometimes we say no to certain deals only because we feel कि एक deal के beyond काम नहीं हो पाएगा. And then the investment we are going to put is not worth. That is a combination of what hunger you see in the developer, what potential, how they are performing. So the example you are giving, I think we did our first deal 2014-15, when, like you rightly said, they had about 7-8 lakh or 9 lakh square feet delivered. Since then, and the annual sale would have been about maybe 250-300 crores, right? Today, that developer is doing 3,500 crore of sale.
Wow.
Per year. They've entered 2 other markets. And they probably come in the top 10 in India, right, in terms of sales and scale and size. So they've grown tremendously. Entire credit goes to him. I think the little contribution that we have had to play and we've been able to do is, we've done about 19 to 20 transactions with them in the last 6 years. The time between the first and the second transaction was maybe 2 to 3 years. But after that, we have probably done 4 transactions every year on an average. So there's a tipping point where you get that comfort, and then you are able to actually contribute to somebody's growth story in whatever limited way you can. And I think that's been probably, the biggest learning for us, which is why we kind of reinforce our mind on picking a few partners in each city, but knowing that these are partners with whom we'll want to go
Long.
for 10 years together, because that's how we can also grow, and that's how we can also contribute to somebody's growth.
Omji, would you like to, explain few successful stories where, institutional partner come on board and then that guy become from, he has also grown immensely with the one or two institutions?
So there are plenty of stories. I can tell you a few. Like one of our developer called as Sumudra, he used to borrow probably normal loans, doing just growing. This was about 8-9 years back, and I happened to meet him. And after that, we started the first fundraise which I did for him was about 80 crores from Bajaj. That was that time the biggest loan which Bajaj did in Bangalore. They used to do about 30-40 crores maximum. So for them it was a big leap of jump. After that, no looking back, today I have raised more than close to about 2,000 crores only for Sumudra. That's not the line what is currently active, but he has churned around multiple loans. He has grown over a period of time. Today, where he used to do 1 acre, 2 acre of projects, today he's doing 15 acre, 20 acre, 2 million, 3 million. Same thing we are doing in the land deals also. So I started 3 years back the land deals and closed successfully. The last 5 deals of Godrej, 4 deals are mine, because I wanted they wanted to partner with one of the biggest landowner, Adarsh. But what happened is Adarsh did not wanted to partner with anybody because for him it's like diluting his brand apart from partnership. So, and he was in need of funds. So, and being a biggest landowner, he has plenty of lands which are sitting ideal on the books. But at the same time, not having cash flow is not a good thing for a developer. So, got his few lands sold where the cash flow came, the lender pressure came down, the financial numbers became stable. Similarly, Chartered is one of the 35-year-old developer. He was selling his plotted development. He sold about 15 plots in North Bangalore because it was 1.5 kilometers inside. Sharmaji of Shobha, they knew Chartered for 20 plus years, but I got involved, and because of me, I showed the value addition to both of them. And for Shobha, maybe this was one of the small plotted project, but they took up this plotted project. What Chartered was selling at 2,000, Shobha sold it for 3,200. Even after taking whatever Shobha had to take, both of them made money, plus the entire project, which probably would have been sold in 3 years, got sold in 6 to 9 months. So that's the value addition which a builder got. So a tie-up from one builder to other also makes a lot of sense. So that's the value addition which a builder should look at it, whether it's a land deal or a debt transaction. Similarly, Salarpuria, I think that's one of my fastest deal. 330 crore loan which they wanted and take over from SBI. And Salarpuria is not about rate of interest. That is by default for them. Any developer is happy, any lender is very happy to work with them. But it's very difficult to get entry, and the terms they want for sanction is something which will make you crazy. It's not acceptable by any lender. All those 5 terms I got it accepted, and 12th February I got the, 2nd February I got the proposal, 11th February I got them a sanction of 330 crore with all the 5 terms whatever they wanted. So plenty of developers, I can keep giving you example. Shobha wanted a revenue sharing. This was started in about 2013. That time bankers never used to understand revenue sharing because same property, how one flat has a revenue for a builder also and for a landowner share also. How do you mortgage that one flat and how do you create a charge on that? So I had a tough time to explain it to the bank, and that to a PSU bank, for them a mindset is very different. And I could crack 175 crore for a Shobha Arena project. That's where all the bankers of Shobha said, we will not do this deal, and I got that done. So Sharmaji told me that beyond his expectation, I did a deal. So there are plenty of examples where any borrower need to be extremely I would say need to have an overall judgment, not on just 1 or 2 points, but an overall judgment of a partnership. Whether it's a financial partner or a land partner, you need to make sure that it's a win-win for both of you. That's where a mindset where you are only looking at yourself, that will not work in any industry, and surely not in real estate. Where you create a win-win structure, it will surely help you. So the future is very good for real estate. What I've seen and I've been hearing, whatever is not done in last 20 years, we all say we did not buy land in Whitefield. But I am saying today also, if you're doing something in Bangalore, the next 10 years will give you a crazy returns on investments. So business is there for everybody. It's just that you need to have a right approach and an organized discipline approach, a win-win approach, which will create a good partnership model. And that's a way to grow. Thank you.
I think I'd like to add to this. I think we've also had some, experience with such partnerships. For us, I think banks like ICICI, KVB, and so on, we've been with them for almost, for example, KVB, we've been with them for more than 20 years. I think be it a 10 crore deal or a 50 crore deal, I think they're there throughout, irrespective of the size of the deal. I think they kind of, being a conservative bank, not doing much of real estate, I think that partnership has kind of, helped us maintain that relationship with them. And similarly, ICICI, I think last 15 years, we would have done at least more than 1,500 crores of deals with them. In a single project itself, we would have done 300 crores of fundraise. And at the same time, there would have been a project where the financial closes required only for about 25 crores, and they'll still be happy to work on that size as well at the same time. So I think partnerships like these are more important rather than, some investor who's looking at only X kind of ticket size, because developers kind of venture into projects which might be of different scale and different appetite requirement in terms of financial closes. I think partners who kind of understand each of these requirements and kind of support at those necessary times are the partners that is worth partnering with in long term, because irrespective of the kind of size and kind of structure of the deal, some might be outright, some might be JV, some might, you will have kind of good cash flows but lesser kind of collaterals, but some there might be a very, huge multiple of collateral, but cash flows might be seen only at a later stage and so on. So I think structures might be varying, but if there's a partnership, strong partnership with investors, I think they'll try and come out with some model which will support your requirement. I think that's what has helped us even today. I think before even we, sign up a project and we, put it up for approvals, I think we already have a in principle sanction for construction finance. So that's the kind of relationships that our existing investors itself have with us. So as rightly pointed out, but by NIHAR and Om, that institutional partnership goes a long mile if invested in a right way.
So having a right partner is very essential. So be judgmental in selecting your right partner at right stage. Thank you guys. Thank you Nihar. Thank you Omji. And thank you Jito for giving this opportunity. Thanks a lot.
Check. Thank you, panelists, for the wonderful discussion. I would now like to request Vikas Ji GULECHHA, Mukesh Ji Surana, and Sunil Ji JAIN to please step up on the dais to felicitate the panelists. Keep an open mindset. Make sure you have the right partners on board with you when you start to invest, and attract investors' money very, very diligently. Thank you so much for this wonderful discussion. Can we have a round of applause for the entire panel, please? Come on. Everybody, can we have a round of applause? Requesting all of you to please take your seats. We have a very, very important person who's going to come and address the gathering right now. So make sure you are all seated to get the best of the last.
I request all the members to please settle down. And now this is a final round. I'm sure this is going to be very tough. And we'll be joining for Haiti after this. We'll have a national anthem. I request all the members to please settle down just for a minute, please. I would like to thank all our sponsors, Shri Vimalji Kataria, Vaishno Devi Group, Shri Sanjayji Lunkat from SNN for sponsoring this conclave, and Shri Mahavirji Mehta from Samvita Group, Shri Ramanlalji from RR Buildcon. Thank you all the sponsors. Without your support, this would have not been very positively done. I also thank all the respected speakers, panelists who gave their valuable time, and that was really a great moment for us. It was a good learning session the entire day, and I would like to thank the entire organizing team here who worked last 2 months tirelessly for this project, and we have seen a good colors coming out of it. Thank you, team. Thank you, everyone. Last but not the least, all the JITO team support here, Vikramji, Narendraji, Deepakji, Rajuji, all who are here, even Vibhaji. Thank you all, thank you. And even the hotel staff who have been very cooperative. Thank you everyone for all the participation. Now I'd request the console to please play the national anthem.
जनगण मन अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड़ उत्कल बंगा विंध्य हिमाचल यमुना गंगा उच्चल जलधि तरंगा तव शुभ नामे जागे तव शुभ आशीष मांगे गाहे तव जय गाथा जन गण मंगलदायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे